Hello, this is Matt on the Moon Lambo channel. I got a few stories to share with you in this very latest Moon Lambo hot jam, including this one from Finance Feeds titled A Broker's Perspective on SEC vs. Ripple. Quote, doesn't really matter to us if XRP is a security or not, end quote. And then there was this one as well, XRP and ETH. Can the upcoming deposition in SEC versus Ripple drive prices? I'll just tell you this at the outset. If you're talking about anything from the court case specifically driving prices, it's going to be when we find out the ultimate outcome. So whether it's the settlement, which would be ideal, or if this thing's fully adjudicated and then we find out from there, that's going to be what drives prices. But these little things in between deposition, yes, as important as they are for the case, I understand that. I don't think so. This is my personal opinion. And then there's this headline too from Crypto Newsflash. Majority of institutional investors to get into crypto by 2026, so says a report. And so that's why I've said, like, if you feel like you're late getting into crypto, no. You are early to the party, my friends. In fact, you are so early to the party that it is rude for you to be here right now. The host was not counting on you being here so early. So I think you should apologize and please have a little bit more tact in the future if you would. Now, I do want to be clear at the outset of the video, I don't have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything that I say or write. I'm just an enthusiast who enjoys making YouTube videos as a super duper fun hobby. And so this first article caught my attention. It was interesting just to get perspective from a broker here, because like I said, I don't have a financial background of any kind, but it's always interesting to just get some insight from people that are in the industry, right? And so check this out. As the lawsuit gets closer to one of its key events, the deposition of ex-SEC Director of Corporation Finance William Hinman, we turned to the trading industry to find out their thoughts on the matter. Different groups have different perspectives about the same issue. For regulators, it's about enforcing the law. For blockchain companies, it's about regulatory clarity. And for investors, it's about the price of the asset. And for intermediaries, such as brokers, it's about being able to offer the best possible trading experience. And so we spoke to Natalia Zakharova, head of sales at FX Open, to first understand how differently has the XRP traded since the lawsuit. And here's a quote. We have seen a sharp increase in trading volumes related to an increase in volatility. There was, and still is, a lot of interest both from institutional investors looking to hedge their positions and retail traders willing to benefit from the sharp market movements. Yeah, and so understand, investing, the point of investing is to experience volatility. And fine, yeah, we don't like it to the downside, but I'd rather take my lumps than not have volatility, because what the hell is the point of investing in something if it's not going to be volatile at all? And so, like, for me, I'm one of the most stubborn investors on the entire planet. I know that, because I will just hold and hold and hold, and I will be patient and I will be patient. I will outpatient any of you listening. In fact, that's a challenge. But no, what I really mean by that is I'm not going to sell unless I feel enticed to sell. Like, well, this is a very high price, and then I will. When prices go to the downside, though, no, that does the opposite for me, and other people will just start panic trading here. But it is fascinating to see from the perspective right here. There's all sorts of people, yes, on the retail side, but also the institutional side, still very interested in crypto, and specifically XRP. And so they also cited something, before I read this next portion, they highlight a CFD, which is something I wasn't familiar with. And so I just hopped on Investopedia and looked it up, because as it turns out, with me having Google, I basically have the sum of all human knowledge at my little Moon Lambo fingertips, and that's handy. And so here you go, Investopedia, contract for differences. And I read through, I basically just skimmed it, but I got to tell you, it basically just sounded like a futures contract. And so I haven't heard of CFD because, again, I don't work in anything finance related, so I think the typical person wouldn't have heard of this. But it really just sounds like a futures contract. In fact, check this part out. This you'll see what I'm talking about here. CFDs allow traders to trade in the price movement of securities and derivatives. Derivatives are financial investments that are derived from an underlying asset. Essentially, CFDs which are contracts for differences, are used by investors to make price bets as to whether the price of the underlying asset or security will rise or fall. And so again, sounds like a futures contract, but I guess they call it something different specifically if it's done in this particular way. It's a movement specifically of a security or derivatives. That's my guess at this point. It doesn't functionally matter, but it's just another investment vehicle basically that's got a name, and then your typical trader would have. Well, plus on top, understand, like, I'm not a trader. I'm a holder. So all this stuff. I don't even not really want to learn it. Like, I just don't care. Like, all this stuff that people get into with trading, my gosh, traders get wrecked. Like, there's so much data out there. It still is just stunning to me. Like, the number of people that are willing to actually be traders, and they think that that's going to make them more money. Almost 100% of traders, and this is not me just saying this, almost 100% of traders lose money. There's data on that. That's true in the stock market and in crypto, yet people still do it. So I ain't going to... I'm a holder. I'm a holder. Because data shows that people that just hold do better in the stock market and in crypto. Like, that's just simple data. But anyway, FX Open offers trading of the XRP/USD CFD, contract for difference, in a time that Ripple is in the middle of a lawsuit with the SEC, prompting crypto exchanges in the US to restrict that instrument until further notice. And so, by the way, so these are settled in cash right here. So the underlying asset XRP not being held here, which is why I said it just sounds like a futures contract to me. But anyway, here's another quote. The lawsuit sent waves of volatility across trading venues, which is obviously good for brokers. However, we immediately saw restrictions coming from some of our LPs, exchanges delisting XRP, and us having to adjust our risks accordingly. Fortunately, we were able to maintain tight pricing, mostly due to our technology, which allows all market participants to act as market makers and thus ensure good liquidity levels, says Ms. Zakharova. And they don't provide specifics, so I don't know exactly how that's helping to ensure liquidity levels, but I'm kind of curious on that. Tell me the secret sauce. Damn it, what are you doing? I'm not really sure about that. And then there is, on this front, the idea of the deposition, like, driving prices. Look, this is of the utmost importance. Of course, I'm not pretending like it's not. Like, this is a big deal. And I'm going to just have to assume for the sake of this video that you're caught up to speed on what's happening with the deposition of former SEC Director William Hinman. It'd be too much for me to dive into that here. But yeah, ultimately, like I said at the outset of the video, in terms of price action, anything court related, yeah, it just matters once the damn thing's settled. Whether it's good news or bad news, that will drive price, I believe, even if just in the short term. But no, all of the little nitty gritty in between, I personally don't think so here. I think there's some quotes down here. I don't want to go through this whole article, but there's some stuff at the bottom. Maybe it's down here. Here we go. The market is clearly following the lawsuit, and the William Hinman deposition on July 27th will likely be a key event as Ripple looks to gain leverage against the Securities and Exchange Commission in order to get the best settlement deal and possibly expose the agency's missteps. The best possible deal, however, may still be bittersweet, as the settlement could include certain restrictions that would bottleneck the flow of XRP, according to attorney Jeremy Hogan. The Hinman deposition could also put pressure on Ethereum, depending on what truths come to light besides what is already known, including the SEC revisiting the nature of Ether, if it is a security or not. And so, yeah, now they're claiming that there is no official position on Ether. Now, how the hell that's possible, given that Ether is the second biggest cryptocurrency on the planet in terms of market cap, and then they're just not willing to offer it as a nation? Okay, super duper here, but we know what they really think about all of this. Now, and I did want to say this too, as far as the bottlenecking the flow of XRP if things don't go well. Look, if things actually went way off the rails, and I do not anticipate this is going to happen, what would the disaster scenario look like? Like, Ripple can't sell XRP and it can't be traded in the United States. Okay, fine. That would impact the liquidity of XRP. Fine. And you'd have a bottleneck there. But just to be very clear here, the odds of that happening are incredibly low. And I've talked about this on the channel many times. Like, the odds of that actually happening is super duper low. And in fact, if you just look at all the developments that have been happening within the SEC versus Ripple case, it's just win after win after win with all this pre-trial stuff for Ripple. It looks fantastic for Ripple specifically. And now I want to jump into this piece from Crypto Newsflash, because this is important. Like, people do not have a sufficiently long-term mindset when it comes to investing, and it bites them on the rear side, I think, as a result of this. But here's a headline from Crypto Newsflash: majority of institutional investors to get into crypto by 2026. And so I just imagine if people buy crypto today, and as long as it's a crypto that's actually useful, so it'll result in actually having staying power, that crypto purchase today, if you fast forward another like 5 years or 10 years or 15 or 20 years, if it's still around, if it is one of the cryptocurrencies that gets adopted, as in there's actual utility, it's going to be worth a fortune compared to where it is right now. And I just feel like so many people, like they're too emotionally invested in the short-term price movements, and I think they kind of miss the bigger picture, and also results in people making emotional buying and selling decisions. But look, like, more and more money is going to continue to come into this space. Like, adoption is going to increase, not decrease, despite pullbacks. Yes, we've seen tremendous price pullback for the last couple months. What is it really doomsday? No, of course not. And so look at what the data here reports. The recent crypto market has been dominated by institutional investors, with many of them resorting to the asset class as a hedge against inflation. MicroStrategy was recently reported to have purchased more Bitcoins to take its total portfolio to 100,000 Bitcoin. According to a recent report, institutional investors will continue to move into the crypto market, with many of them expected to come on board. And just let me pause here before I even go any further. Think about this. Bitcoin has already run up, just a couple months ago, to $65,000 roughly. $65,000, and that's with only roughly 1% of humans on the planet having ever held cryptocurrency of any kind. Think about this. There's not enough Bitcoin for everyone, not at these prices. And so if it's really going to have staying power, my gosh. And so you can see, and think about this too. Look at how high XRP got even last market cycle, when it was like a fraction of a percentage of humans on the planet had ever held XRP at any point in time. It's like something like 0.001% back then, when XRP ran up to almost $4. Well, where do you think this is going as more people jump in? That's why I'm so excited for the future here. But anyway, piece continues. Based on the results of the survey published by Fidelity Digital Assets, 70% of institutional investors plan on buying or investing in digital assets in the near future, while 90% of them plan to enter the crypto market by 2026. The survey was blindly conducted and considered the views of 1,100 institutional investors across the US, Asia, and Europe. It was revealed that 52% of the surveyed institutions currently invest in digital assets. The survey further disclosed that institutional investors in Asia have significant exposure to crypto compared to the investors in other regions, though those in Europe and the US are catching up fast. As it stands, the adoption rate of Asia is 71%, followed by Europe at 56% and the US at 33%. The reason for the growing crypto interest among institutions was linked to fiscal and monetary measures. Tom Jessup, the president of Fidelity Digital Assets, said the following. The pandemic and fiscal and monetary measures in response to it has been a catalyst for many institutional investors to define their investment thesis and operationalize it. And so what's happening in the real world clearly impacting the way that people are treating their money. Not too much of a surprise, but it's good to see actual data on this. Now, the rising crypto interest discloses that institutions have developed a deeper understanding of the asset class and have progressed in the three-phase journey from education to adoption. In addition, 9 out of 10 surveyed institutions admitted that they find the high potential upside and the low correlation of crypto with other assets appealing. It was also disclosed that 8 out of 10 institutions agree that Bitcoin should be a part of their portfolio. Though this belief is largely shared in Asia, more than 3/4 of institutions in Europe share the same opinion, compared to the 2/3 in the previous year. And in the US, 69% of surveyed institutions share this belief, a rise from 64% in the previous year. And look, it's only going to continue to go this direction. Right now, if you're in crypto, you're basically a trailblazer. So again, welcome to the party, even though you're early and it's rude to be here. Well, you never know. But people are just going to keep on piling in, and eventually it's going to be common wisdom of, well, of course cryptocurrencies, of course it all worked out. Look, there was never a chance that crypto was, but by the time people the world over, the majority of people hold that position, the opportunity will no longer exist, because eventually the crypto asset class is going to be just as boring and as investing in precious metals. There will always be volatility, but it will be substantially less than it is today. Right now, there's just a frenzy around the asset class, and there's so little money in the crypto asset class that it doesn't take much money going in or out to really stir things up. And so there's whales, there's manipulation, there's all sorts of not so good stuff too, but it's part of the space. And it's not always going to be quite like this. And so I'm excited to be like, I am here for the volatility. And it's been a hell of a ride. But I'll go ahead and wrap up there. I am not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.